Welcome to the ISO Show, dispelling myths and sharing tips for success to improve your business with ISO standards.
If you're listening to this podcast, then you're in great company. We've got thousands of listeners who have a thirst for continual improvement and raising standards in business. Whether your interest is in quality, sustainability, or risk standards, I'd love to welcome you as a member to our online platform for all things ISO, the ISology Hub. The ISology Hub is the leading place to get access to all of your online resources, from in-depth training courses through to our very popular coffee break training, to templates and action plans and many other resources to help raise standards. As a member, you get access to over 100 courses, taking you from learner to practitioner to leader. The ISology Hub has all the resources that you need, which will really help to make your life easier and to help improve compliance in those business critical areas. So if you'd like access to learning and compliance resources ranging from data privacy to environmental management, anti-bribery, business continuity, quality, health and safety, to name just but a few, the list is endless actually, then we'd love you to come and join us. Just head over to the isologyhub.com. As the urgency to address the climate emergency heightens, businesses are coming under increasing pressure to monitor, report, and reduce their energy use and carbon emissions to meet net zero targets. As a result of this, there's an increase in regulations to ensure that companies are taking the climate emergency seriously and not just paying lip service to climate action. During this month, I'm going to be sharing insights on the latest regulations that may affect your organisation. In fact, it's a bit of an alphabet soup, is this series that we're going to be covering. I'm actually going to be covering the Streamlined Energy and Carbon Reporting Disclosure Requirements, SECR. I'm also going to be covering ISSB S2, which is the International Sustainability Standards Board Climate-Related Disclosures. And then we're going to be looking at some European disclosures as well, which we are adopting here in the UK. For those of you that are listening in the UK, that's a CSRD, Corporate Sustainability Reporting Directive, and the CSDDD, which is the Corporate Sustainability Due Diligence Directive. So all of these contribute towards an organisation's ESG reporting requirements. So we know that organisations are looking at reporting their ESG claims, their commitments and pledges, but this is going beyond that in terms of what the mandatory requirements are for organisations. Now, some of these mandatory requirements will be applicable to your organisation and some of them won't, and that's what I'm going to be explaining about in this series. Now, it's not just a mandatory ESG reporting requirements I'm going to be covering. Next month in October, just to give you a bit of a heads up, I'll also be covering a couple of the voluntary schemes that many organisations are adopting due to stakeholder requirements. And I'm sure you've heard of some of these, but may not necessarily have been involved with them that much, or your company may be just talking about it because it's coming up in tenders. So some voluntary schemes that I'm going to be covering in October is the CDP. So that's an international disclosure requirement, and that's the Carbon Disclosure Project. So it's voluntary at the moment, but thousands of organisations across the globe are aligned with it and committed to it, and in some cases at the higher level are getting verified against it when it comes to their greenhouse gas emissions. Another one that's very popular, certainly here in the UK, is EcoVadis. So some organisations are going through EcoVadis in order to be able to meet a particular stakeholder's requirements, in order to be able to retain a valuable contract or to win a valuable contract. So many organisations are pushing EcoVadis down the supply chain. So again, I'm going to be covering that as a voluntary scheme at a later stage in October. So I'd like to kick off this ESG reporting series with the SECR, because this is the one that's been around the longest out of the 4 that I mentioned that I'm going to be covering in this series. And it's one that some organisations will have heard of and may be familiar with. So I thought I'd start here because this is the easy one, really. So yeah, let's kick off with SECR, which is the Streamlined Energy and Carbon Reporting Requirements. So it's been around since April 2019, and it was actually established to replace the Carbon Reduction Commitment Scheme. It's mandatory, so it is a legal requirement. So it's a mandatory sustainability reporting framework for large organisations in the UK. And I'll come on to the qualifying criteria for that in a moment. But the aim of SECR is ultimately to reduce energy consumption and carbon emissions by providing companies with a clear understanding of their energy usage and emissions. So some large organisations will be familiar with ESOS. For those of you that aren't familiar with ESOS, the Energy Saving Opportunity Scheme, it's something that comes around every 4 years as a reporting requirement in Europe, and we've covered a number of podcasts on that. So just go back to the ISO show, do a quick look up on ESOS, and you'll be able to get information on it there. So, yep, there's no escaping it. It is a legal requirement for large organisations in the UK, and large organisations is defined in the Companies Act 2006. So ultimately, it's created to report on an organisation's energy consumption and associated carbon emissions within their financial reporting for Companies House. So it's interesting, we've seen over the last few years, over the last 5 years, financial reporting, including sustainability reporting, that is only going to increase. And you'll hear more about that when we talk about CSRD and ISSB in later podcasts. But it's not just looking for companies to report on their energy usage and carbon emissions, it's also looking for organisations to report on efficiency measures that are taken throughout the year on an annual basis. So this isn't just a tick box one-off thing that a company does, it's an annual commitment. I'll just repeat that. This is an annual commitment that organisations need to do and submit with their financial reporting. So let's dive into SECR a bit deeper to help us understand what Streamlined Energy and Carbon Reporting Framework is all about. So let's take a look first of all at what the SECR emissions reporting requirements are. So SECR has specific requirements for the disclosure of greenhouse gas emissions. So it's not just carbon, it's all 7 greenhouse gas emissions and also energy consumption. So emission reporting requirements vary slightly between quoted companies and large unquoted companies and LLPs. So what does that actually mean? Well, quoted companies, so those companies that are on the stock exchange, for example, they need to basically disclose their global Scope 1 and 2 greenhouse gas emissions. So they have to report on their Scope 1 and 2 greenhouse gas emissions. And Scope 3 emissions reporting is strongly recommended, but voluntary at this stage. So they're the quoted companies. For large unquoted companies and LLPs, UK-based Scope 1 and 2 emissions and associated energy consumption needs to be reported, and Scope 3 emissions from the combustion of fuel in vehicles or equipment not owned by the company. Okay, so there are slightly different variations between quoted and unquoted companies. Are you new to ISO standards and want to know what it's all about? Or maybe your company has multiple ISO standards, but there's a lack of engagement and compliance. Whether it's quality, sustainability, or risk standards, the Isology Hub is your one-stop shop for all your online learning resources associated with raising your company's standards. From as little as £99 a month, you can have unlimited access to hundreds of online training courses and achieve certification for completion of courses along the way, which will take you from learner to practitioner to leader in no time. So what courses are in the Hub? Well, there are courses on everything a head of quality, sustainability, information security and health and safety would need to manage compliance and raise standards. With over 100 courses available to you, here are examples of just a few. ISO 9001 Internal Auditor, how to transition to the new ISO 27001 standard, the role of ESG in quality management, and how to integrate management systems. But it's not just courses in the Isology Hub. You can access templates, downloads, and action checklists to take your business to the next level. So why not try the Isology Hub today? Just click on the link at www.isologyhub.com and you'll get access to all our resources within minutes. If you're interested in embedding best practice across your organisation or would like to develop an awareness and training programme for employees, we offer a free learning and development session to tailor a bespoke training programme based on your organisation's needs. So we'd love for you to join as an Isology Hub member. Just head over to isologyhub.com to get access to your unlimited training and compliance resources. So who actually qualifies SECR? So I've mentioned about large organisations, but this framework applies to all those UK quoted companies, as I mentioned, in basically any company that has shares listed on the UK Stock Exchange and is required to comply with SECR. And for those large unquoted companies and large LLPs, these are the organisations that aren't listed on the Stock Exchange but meet 2 or more out of 3 criteria. So those 3 criteria that they need to meet 2 of includes turnover, balance sheet, and number of employees. So the first one, turnover, you need to have a turnover exceeding £36 million per annum, or a balance sheet total of more than £18 million, or number of employees 250 or more. So if you meet 2 or more of those requirements, then it is applicable to you. So this does actually apply to thousands of organisations in the UK. So these criteria just help to ensure that the SEC framework targets large organisations that have a significant impact on the UK's energy consumption and carbon emissions. And by complying with SECR, these organisations can contribute significant to our sustainability goals as a nation. Now, this isn't to stop organisations that don't meet that criteria from actually calculating their carbon emissions and voluntarily having that information ready, because, as I mentioned earlier, there are certain voluntary schemes like EcoVadis where you may be required to do that. So a question that we get asked sometimes is, when is the SECR disclosure made? The SECR reporting has got to occur alongside the financial reporting. So therefore it needs to be included with annual reports and directors' reports, which are then filed with Companies House. One thing I must stress is the importance of the accuracy of the SECR reporting and carbon reduction, because this helps an organisation to not only meet the compliance requirements from a regulatory perspective, but also helps to unlock valuable insights and help to drive continuous improvement and opportunities for operational improvement. So don't see this as a tick box exercise. Look at it as a way to be able to evaluate the costs within your business associated with energy consumption and how you can potentially reduce that. I think the other key aspect, though, in terms of the importance of accuracy, is demonstrating credibility to your key stakeholders. So, stakeholder engagement, particularly when it comes to having a robust greenhouse gas emissions reporting framework, is fundamental to be able to establish trust with key stakeholders and to basically add credibility and ensure that you've got repeat business. So by demonstrating your organisation's commitment to energy efficiency and carbon reduction, it can really help to improve your brand as an organisation and foster positive relationships with those key stakeholders, which could include, for example, investors, clients, as well as obviously regulatory bodies. I think I'd just like to end with highlighting some of the benefits of integrating SECR reporting with other carbon management initiatives. I think some organisations are missing a trick by keeping the SECR reporting separate from the rest of the business activities, when actually it should be included as part of a sustainability umbrella across your organisation. It can dovetail beautifully into other reporting requirements like EcoVadis, ESOS, CSRD. You don't have to reinvent the wheel time and time again with all these different reporting disclosures. You can have one mechanism for ensuring that it's ticking a lot of these regulatory boxes and also the voluntary requirements as well. So why not embrace SECR and include as part of your sustainability management system? Now, you may call that an EMS, you might have an energy management system, it might be part of an integrated business management system that includes multiple ISO standards. And obviously I'm talking about this from experience because that's our bread and butter at Blackmores in terms of creating integrated management systems that meet regulatory requirements and also statutory requirements and contractual requirements. So you don't need to make life difficult for yourself. You can integrate all of these requirements into one management system. And it makes so much sense if you're going to be doing this every year. You don't need to reinvent the wheel every single year and have different people working on different aspects that are completely divorced from the rest of the business's operations. If you can integrate it, it then becomes business as usual. And that's ultimately where we need to head in terms of having sustainably run organisations. So why not incorporate this as part of your net zero strategy? Why not incorporate this as part of your carbon reduction plan if, for example, PPN 0621 is one of your reporting requirements if you need to tender for contracts for public sector here in the UK. Why not integrate this into your supply chain emissions management? Try not to see SECR and all these other reporting requirements that I'm going to be covering in September as separate entities. You can actually, although you need to obviously submit them potentially to different stakeholders, the mechanism that you use for reporting on your greenhouse gas emissions, for example, could be one solid framework that you can then utilise the output of and slice and dice to provide an output to your different regulatory bodies. So I think it's fair to say that this streamlined energy and carbon reporting disclosure requirement, SECR, it provides a framework that provides a pivotal role in driving energy efficiency improvements and emissions reductions across all organisations. So I'd just like to end by saying that, if you have any queries about SECR in terms of compliance, then we would be more than happy to speak to you at Carbonology. So notes from this podcast will be included if you click on the link to the media player that you're catching this podcast on today. We'd be more than happy to have a chat with you about this at any time with one of our experienced carbonologists on SECR reporting and embedding that as part of your overarching sustainability framework. So thank you very much for listening today, and I look forward to catching up with you on the next episode of the ISO show, where we're going to be covering part 2 of our ESG reporting series, and we're going to be covering ISSB 2. Sorry, I did warn you, this is an alphabet soup for standards and requirements. So that's the International Sustainability Standards Board climate-related disclosures. Whew, I'm ready for a cup of tea now. Thanks for listening.
Looking to use ISO standards to drive better business practice? Contact us at blackmoresuk.com to access further information and book your free 15-minute call.